Good morning and welcome to the Killik and Co Market Update. We're right in the middle of reporting season, so it's a very busy time at the moment, and there's lots of focus on the technology sector, bearing in mind that the sector has really underperformed the rest of the market over 2022 so far. And we can see this underperformance by looking at the performance of the Nasdaq Composite Index, which is very tech-focused, in comparison to the S&P 500 Index, which is much more broadly diversified. Here on this chart, we're comparing those two indices over the last year, and you can see that over the last quarter in particular, the Nasdaq Composite has really underperformed, and in fact, it's below the S&P 500 by around about 10%. So we have had a lot of focus on the tech sector because of this, but the tech sector did get off to a fairly positive start to results season, starting with Microsoft. Microsoft results beat expectations, and that was very reassuring for the market because Microsoft has become such an important core holding for so many funds and portfolios. Next up, we had Meta, formerly known as Facebook, and there was lots of nervousness here because last time Meta reported, the results were very disappointing and the shares lost over a quarter of their value on the day that those results came out. A key metric for Meta is the number of daily active users. So here on this chart, we've got the number of daily users for Facebook, which is still the core and original platform. And the last quarter was actually the first one in which Facebook had reported a drop in daily average users. And that's what caused the shares to sell off so heavily when those results were last reported. However, this time around, we have seen a nice recovery in daily users, and that sent the shares up by over 17% on the day that these results came out. We can also have a look at the daily users for the wider group of platforms that's owned by Meta. They call these their family of platforms, and it includes Instagram and WhatsApp. And we can also see there's a nice upward trend in the daily users here, so that certainly is a very reassuring sign. While Meta's results beat expectations, Amazon's results did not. The company reported after hours last night and shares were down about 10% in after hours trading. And the key reason for the shares coming down was this paragraph from the results here. Our consumer business has grown 23% annually over the past 2 years, with extraordinary growth in 2020 of 39% year over year that necessitated doubling the size of our fulfillment network that we'd built over Amazon's first 25 years, and doing so in just 24 months. Today, as we're no longer chasing physical or staffing capacity, our teams are squarely focused on improving productivity and cost efficiencies throughout our fulfillment network. So we'd become very used to Amazon's continuous expansion of capacity on the retail side, and this paragraph makes it quite clear that the company is no longer looking to expand that part of the business in the short term. So that did come as quite a disappointment, and that is the reason why the shares were down in after-hours trading last night. And you can see by looking at the share price chart that the shares performed incredibly well during the first lockdown, but they have been rather flatlining over the course of the last few months. However, it's definitely not all bad news. If we look at Amazon Web Services, or AWS, which is Amazon's cloud computing division, this has now become the biggest cloud computing provider in the world, and it's still growing incredibly quickly. In the last set of results, Amazon said that the income from the Amazon Web Services division was up 57% year on year. So that's certainly reassuring, and it shows that Amazon is still capable of being a growth business. And finally, it's worth noting that the pound has weakened quite considerably against the dollar over the last few weeks. Here's a chart showing the performance over the last year, and you can see that last year £1 would buy over $1.40, but now it will buy less than $1.25. One of the reasons for this is that the dollar is still seen as a safe haven currency, so when investors are worried about market volatility, they tend to move into dollars, which weakens other currencies. However, for those based in the UK who are holding dollar stocks but valuing their portfolios in sterling, this weakening of the pound will actually work in their favour. Moving on to have a look at next week, you can see it's still reporting season, it's still very busy on that calendar, but we are looking ahead to results from big oil companies BP and Shell. That's it from us. Enjoy the weekend, and we'll see you next Friday.